This is Rod Kusin Spooman for Risk. Today is September the 11th, Friday. And our chart that is before us is our premium chart, and all time stamps are Central Time. We had one of the most fantastic setups from the premium that we have seen in a long time. Beautiful setups. And we want to show you how this works. These are the Spoos, the ES contract, December contract, by the way, and we have the S&P, the ES, and the NASDAQ premium. If you want to know how to read the premium, go to our website, RSKsys.com, click on the premium tab, it'll show you how. Now, we're going to run through this very quickly. Pay close attention. When we get a new high on the premium, it indicates for us Spoos should be going higher. If we get a simultaneous new low, it also indicates it could be going lower. We don't know what it's going to do next, but depending upon what happens, it can tell you what action to take. In this case, instead of going lower on the next bar, it went higher. You already know now it's coming back down based upon this low of the premium. It should go lower than the low associated with that bar. So now you're looking to short the market. Where are you going to short the market? Well, that's another issue. We'll talk about that in a moment. If you're not already short, on this bar you get another new low on all three premium feeds. If you're not short yet, you better get short. You've got an 8-tick move here that you could have capitalized on. A little later, Spoos move back up. Another new high on the premium here, as well as here. Spoos are going to go up. But as they do, and they hit a new high on this bar, you get another new low on both premium feeds. That is a classic reversal. It not only tells you what to do, it's telling you when to do it. It's telling you immediately take action to short the market. Now, if for some reason you didn't do that, over here at 901, you get another new low on the premium and on an equal high on the Spoos. You better get short with all the gusto you've got. And boom, down she goes, 4 points. Is that good enough? Now, it comes down to 1038.50. That's the price associated with that bar. 1038.50. And you get another new low on the premium. It's ultimately going to go lower, but it doesn't do so immediately. It goes up, in fact. Okay? All right, it goes up, and then ultimately, what does it do? It comes right back down to 38.50 and lower, in fact. Now, how could you have capitalized on all of this information? Where would you have taken a short? Where would you have potentially gone long? How would you know? Well, we already told you immediately is immediate, but we can be even more precise than that. This is our divergence chart. It tracks divergence on the ES, the VIX, as well as the ADS-PD, the advanced decline of the S&P 500. When we're divergent, we plot a colored bar on the screen according to the data feed that created it. And where we said at the beginning of the day, where would we short this? Well, we could either short it here, or we could short it up in here after the gaps occurred. This is a classic gaps preceding divergence pattern, and we have divergence on all three different data feeds. There's where you would have taken the short trade, and here again at the high, you're divergent, telling you precisely where to take the short trade. Remember, we had new highs on the Spoos simultaneous with new lows on the premium. Here it's telling you precisely where to take action. How long are you going to hold that trade? As the Spoos come down, notice what happens. you get divergent again on the ADSPD. This is telling you a good opportunity to get out of the trade or go long. So now, depending upon what happens here on this premium, or pardon me, on this ES bar, it's now showing us we're divergent again on the VIX as well as the AD. Pretty good opportunity to take a long trade. Even though you know the market is coming back down, it's going to come back down to this price based upon what the premium said, 38.50. Here it's telling you, at least for the time being, we have a good opportunity to go long. Of course, if we do, where are we going to short it? Because ultimately, it's coming back down. So where are you going to short this? Here's what you're going to do. Now, on one of our group reversal charts, as the market came down and was divergent, right in here, we had group reversals also telling us to go long in here. As the market moves up to a slightly higher position, we get a little different colored bar here. That's a warning signal. There's some weakness entering into the market, but it may not be ready to short yet. Now, a little later on, you get another colored bar that spells to our trained professional traders that there's weakness coming into the market. This chart is not going to permit us to see precisely where we need to short it, but it is telling us we need to look for some reason to short the market. A group reversal needs to take place. By the way, if you don't know what a group reversal is, go to our website, RSKsys.com, read about group reversals, read about divergence. It all is described for us, for the public there. But let me show you what the action is that needs to be taken. Now, where the vertical line is right here, that's where that colored bar was that shows us we've really got some issues coming into the market. There's weakness here. Now, we've got all sorts of weakness showing up here, but you really can't tell until that bar occurred that action really does need to be taken here. So as the market comes up here and these colored bars begin to change, now you're looking for a group reversal on this chart. And you get that reversal when the color bars change from dark magenta to yellow and back to dark magenta. That's an opportunity to short right here, or right in here when it goes from yellow to gold and back to yellow. That too is a group reversal. If you don't know what we're talking about, go to our website. It's all described for you there. Now you're at 42.50. You know the market's going down to 38.50 at least. Why? Because of the premium. The premium said it was going lower, and guess what? It does. 38.50. There it is. Now, should you have taken any kind of action as it moved down to the lows here? Here's our last point. We're going to go back to our divergence chart and show you what's happening with the divergence once again at the low. Okay? Right in here, you're divergent again on the VIX as well as the AD. Both forms of divergence have showed up again right after the predictive power of the premium was fulfilled. The divergence came in again, telling you to get out of the short trade and go long. If that's not a good enough roadmap for you, then please tell me where it is to be found. But I can tell you this much, today was an awfully good day. You could read the market like a map. And what did you use? Group reversals, divergence, and the premium. Perfect trades all morning long. This is Rod Kusin and Spooman for Risk.